Hey traders, welcome. Doing our top tier outlook a little bit earlier. Today it is Christmas Eve, or heading towards Christmas Eve anyway. It's 4:15 Eastern. Hope everyone's been having a relaxing, wonderful day, friends, family, etc. So I am still, even on Christmas Eve, football's getting ready to start. I'm going to still be looking at the charts together. So what I thought we'd do is follow up on Friday's video called Santa's Picks. And just as the name suggests, I was just showing the uh, the sectors, well, the indices, the sectors, and the stocks that are on my watch list, that are on my radar, and those are going to be the ones that ultimately map to the trades I'm going to take. So, presuming a lot of folks are going to be pretty busy. I thought, you know what, let's simplify a lot of what we talked about. I took some notes from my notes before I cut the video. So I'm going to go over those with you all here. And we're going to break down some of the symbols, as many as I can anyway. If you have any questions, feel free as always to type them in. And again, gang, happy Christmas Eve and happy Christmas early. Hope everyone's having a really good weekend. All right, so let's get to it. If you didn't, again, this is all to be based on the ideas from the video Santa's Picks. So check that out over at the Simpler Trading YouTube channel. And I'm going to jump on over to the charts here. There we go. And these are all daily time frames that were discussed in that video. And this allows for a slightly longer term swing setup. But what I thought I'd do in this video is also open up the 60-minute time frame, because that is the other time frame that I view for short-term swings. So I have a short-term swing, typically a 1 to 3 day time horizon, and then I have a longer term swing, which is basically about 2 to 10 days. Again, that's not to limit what the trade could be, but that's just to give me an idea of what the time horizon life cycle of the trade could be, and therefore I can keep in mind some expiration dates and things like that. So we'll cover that as we go through the video. And if you have any questions, again, please feel free to ask. And so first of all, just a quick recap. Santa Rally is the last week of basically window dressing that's been going on all month long. 22nd, this Friday that just passed, to the 29th, this Friday that's coming. And that's the window for what will be the sort of emphasis of the rally for the month. And all of this is really predicated on a simple thing that I believe to be true, although sometimes when folks think about it, they say, how can that be true? And I'll explain. What we trade is more important than how we trade it. And you might say, wait a minute, Rog, how can that be true? Well, I'm presuming no one here is picking a top in an uptrend. What I'm saying is if all of us here in this room right now, we're looking at the NASDAQ, I would think most of us are looking for a buy the dip opportunity. Frankly, if you're watching me right now, and let me save everyone's time. If you're watching me right now, waiting for me to tell you about all the terrible things that are going to happen in 2024, but all the reasons why this is not real and this can't last and everything else, definitely don't watch any further. I am not the person you need to be listening to. However, that said, those folks that have been talking about the shoe falling all year long are at all-time highs in the NASDAQ. So let's also think about what narrative that maybe we're hanging on to and not letting go of. All right. That said, I would think most of you listening to Top Tier Outlook or even Charts and Coffee are bullish because, well, the NASDAQ's in an uptrend, and that means buy the dip. But what if you're buying into momentum? Does that work in an uptrend? Absolutely. If you're buying a dip in a trend, if you're buying momentum in a trend, what you trade is more important than how you trade it. Those are two very different hows. Buying momentum, buying the dip, they couldn't be any different, right? So when we're looking at an overall uptrend, I don't know what the top is. I don't care what the top is, right? I want to know at what point can I buy the pullback? All right. And this is something that I know is going to come out a lot more in 2024, which is, look, gang, if whomever you're listening to, whomever you're watching, remember, everyone's going to have a very particular view on the overall markets. But I can say this really confidently. Pessimists don't make money. Bears have been getting their you know what's handed to them most of the year. Please be careful listening to people who only have negative things to say about the economy, negative things to say about the stock market, and feel really happy following people who equally have negative things to say about the economy. I'm not saying be Pollyanna, but follow the data. Because if you are, you're a bull, right? We're going into a dovish period of the Federal Reserve. If you've never seen that before, buckle your seatbelts. So know who you're listening to and know what their overall take is. And, I'm going to follow the data. I'm going to follow the macroeconomic trend. And it's tough to be a bear. All right. So we're going to buy the dip. What we trade is more important than how we trade it. So let's say we're going to buy the dip, and we're going to do so with the QQQ. Not that I would not recommend NQ futures or MNQ futures. Not that I would say that don't do that, but I think most people usually listening to me are some sort of options traders. Here's the QQQ. First of all, the question I get, Rog, what expiration? So imagine this is a session that I'm doing in the Sector Secrets Mastery, which, by the way, I think you can pick up on sale between now and probably the early part of next year. There's probably, I don't know what the sale window is, but I'm pretty sure it is on sale. But if we were in the Sector Secrets Mastery right now, what I'd be telling folks is, what's the level from which we want to be buying? And that's for the most part going to be the daily price movement range. That's the gray zone. This is a volatility-based support level. Okay, so now I know what my price trigger is, my price area. Okay, the next thing I'm going to do is ask myself, well, how much time to expiration? And that might land me, and we have a lot of choices with QQQ. We have a lot of choices actually with SPY as well. So if I'm looking at QQQ, probably the closest that I'd even consider would be December 29. That means I'd have to get out with the very end of the Santa rally, or December 5. So those are really two of the expirations that I'm most interested in, December 29 or January 5. All right, so that's the expiration. That gives me anywhere from 5 to 12 days to expiration. All right, and of course, more time to expiration is going to be a slightly higher premium to pay. Long calls here, gang, long calls. Now, what do I want? I want something like what we saw on the 20th. So on the 20th, I'll tell you, on the 20th, we use a lot of communicate. I communicate with my traders in the Sector Secrets Mastery. So I was going back and forth with the Lorna bot, and Lorna said, hey, what do you think about QQQ? It's been on our watch list. It's in the daily price movement range. This has been something we've been looking at for a bit, and it would have positioned us after GDP. So it was the day of GDP, but before PCE. A little tricky, but it had sunk into the daily price movement range so beautifully on Wednesday. Now take a look at that chart on the left. That's the same thing as this big down candle, the same zone. But look how it started to stall out. We put in a minor low. It started to level out inside of that zone. So we bought 403 calls that expired December 2/2 and made it a short-term swing. I'm just looking for something like that again with possibly a December 2/9 expiration or a January 5 expiration, right? So when people ask me, what about expiration, Rog? It depends how long you want exposure to this idea. Those would be two really good ways. Why those two dates, Rog? Those would be two really good ways to take advantage of the Santa rally. If you don't want to end the ride so quick, clearly you can go further out, but I would stick with that. I would stick with either December 2/9 or Jan 5, and I would look for some pullbacks sometime in mid to late January. Again, I'm not predicting in any way, but I imagine we'll see a little bit of profit taking, window undressing, maybe some sector rotation. Those are possibilities that could create a little bit of weakness, which would give me another opportunity to buy Qs on a dip. So I would focus on 2/9 Ds, 5 Jan. All right, that's the QQQ. The expirations would be the same for the SPY. Now, those of you that have been following along in Charts and Coffee know that since the financials, XLF, have really come into their own with the uptrend, JP Morgan's heading higher, Wells is heading higher, Citi, Bank of America, Morgan, actually everything in the top 11 in financials are heading higher, save Berkshire Hathaway. All right, that's the only one. And so can XLF continue higher with the other 10 names heading up. Berkshire's not in a downtrend. It's just not in a great uptrend. XLF makes perfect sense here, but then the question is, do I want to buy XLF 37 strike calls if we dip into the gray zone for January 5? It's not super liquid. I got to be frank. And the 37 calls for this coming week, if I don't have an option that's at least $1 in value, I am not going to go throw my money into buying 30, 40, 50-cent options, gang. I do not recommend it. The percentage move, while fun to talk about, you guys know, I say percentage discussions about winners is disingenuous at best, deceptive at worst. I won't do it. I'll tell you how many points we pay and how many points we get out of. And the dollars, the points are all that matter. Well, if I get us into something that's 30 or 40 cents and we make 100% return, we made 35 cents. I don't know how many of you out there are going, great, we made $35 per contract. You start buying 10, 20 contracts, fees and commissions are a thing, gang. Now, $1 is a minimum. I'm not shooting for $1 options. I like them to be somewhere between 3 and 5. But look, I'm not going to go less than $1. So that takes the 29th out of consideration as well. And that puts me into the first trend in the financials. That's going to be JP Morgan. JP Morgan pulls back to around the 165 area to 162.5 strike. The 165 to 162.5 strike has plenty of open interest, about 1,200 at 165, 2,000, nearly 2,100 at 162.5. And they're about $3.40 to about $5.50. All right, I can get some decent point moves out of something like that. I'll clearly pay less for the option because one more day will elapse. That's your time decay, and I'm waiting for a pullback, right? These are prices that reflect trading and closing at around $167. As we trade down to 165 to maybe even 163.5, those 165 calls or 162.5 calls will drop in value. The way that I look at that is a temporary, very near-term temporary mispricing. That's what I'm trying to take advantage of. Does anyone want to pay more for a call when there's bearish momentum? Of course not. The way I look at it is, if the trend is up and this thing that's for the most part heading higher after dipping is moving lower, that's basically an opportunity for me to pick something up on sale. It has value. For me, the value is the synonym for the uptrend. Why would I want to call in an uptrend? It has the best probability for following through. So to me, that move to the downside is a temporary mispricing because calls are valuable. They're more valuable to me than puts in an overall environment of heading higher, higher highs, higher lows, right? So I want to take advantage of those temporary mispricings. So JP Morgan would be my choice there. January 5 expiration's great. And again, can I go to December 29? Yes, I can go to December 29, but be careful. It would have to be the 165 calls. So keep an eye on that open interest. All right, I mentioned SPY. And these are all, again, gang, these are all the names that I took notes from and notes of with that Santa's picks video where I talked about what I want to trade. All relative outperformers, and most of them are index sector stock strength. The index is strong, the sector is strong, the stock is strong. And I also talked about things that I don't want to trade, right? Trade this, not that. I like Intel better than I like AMD. I like Intel and AMD better than I like NVIDIA. I like NASDAQ. I like Amazon, but I don't like Tesla. Why? Because of relative performance, which are in strong, healthy, green trends. All right, so SPY, how do we do this one? Once again, same expiration as QQQ, either the 29th or the 5th, and then I want to see price pull back to about 470 to 468. Now, every day I'm going to have, using my daily price movement ranges, a brand new, fresh, more accurate view of volatility for that session. This is not a generic, let's go back and look at 7 days or 14 days or 21 days. This is not an average true range, gang. This is actually a very different study. It's a historical volatility study of the behavior of each Monday, Tuesday, Wednesday, Thursday, Friday session. an accumulation or a running tally of the previous 7 to 14 or 21 candles that preceded the current candle, which is what, say, an ATR would do. This is actually an historical look back of 6 months and asking, what does Monday typically do? What does Tuesday typically do? So on Tuesday, I'll look at Tuesday's relative outperformance, and I'll look at what the typical behavior of a Tuesday is in its historical volatility context, and I'll get a slight adjustment. As you can see, they adjust of where the daily price movement range and hourly price movement range is. And I believe these are on sale during the holiday sale as well. So, pick these things up less expensive, gang, if it's something that you wanted. And this is what I'm going to be using going forward. And so that's what I would say, 2/9 December or Jan 5 for the SPY. Now, let's see, what else did I talk about in that video? Home Depot, McDonald's, and Lowe's, I still very much like in the consumer discretionary. And let me show you all another view that is a staple in our mastery. This is how we build a watch list. And I frankly don't know how to build a watch list in any better a fashion than this. And that is what I focus on. Here is, let's go right here. Here's the consumer discretionary layout. This is where Amazon and Tesla hang out, right? But they're not the only things here, although they are the heaviest weighted things in here. So you can see Amazon. See these two labels? One label tells me what the momentum is doing. That's a short-term set of moving averages. The trend tells me what, the trend is doing, and it's a longer-term set of moving averages. And when they're both green, this is what we call double green. So when I talk about green trends, I'm being quite literal about the way the indicator reads on that stock. So what don't I want to trade in consumer discretionary? I don't want to trade Tesla. Not that it can't go higher. A high tide does tend to lift all boats. But why would I want a boat with a potential broken bilge pump, right? For those of you that are boaters. I don't want to trade Starbucks. I don't want to trade TJ Maxx. I don't want to trade O'Reilly. Now you might say, what about Nike, Rog? This thing got hammered. But the fact that this is still in an uptrend after a significant pullback tells me, look, gang, the green doesn't mean just buy. A lot of times traders hear a trader like myself or anybody else out there say, I'm bullish. That is not the same thing as I'm a buyer. That just means I want to find a buy setup, right? So when I say I'm bullish, it doesn't mean I'm just buying every day or randomly buying. It means that I'd like to find a buy setup. So a Nike, I'd like to find a buy setup. That trend is still up. I'm going to need a setup before I put my money at risk. Tesla, it could go up with everything else, but Tesla, Starbucks, TJ Maxx, and O'Reilly are just not good looking trends compared to other trends that have been following through to higher highs and higher lows a little bit more consistently. The aforementioned financials, right? So let's go to XLF. What is buy the dippable here? JP Morgan, Visa, MasterCard. See all these names here? My main thing is make sure it's a scalable option, which means reasonably priced, so you can buy multiples of them. I like buying in pairs, so 2, 4, 6, 8, 10, 12, whatever number of contracts. And I want to make sure that there's enough liquidity, right? I don't want to be trading strikes that are less than, 500 is my minimum, but I don't want to trade strikes that are less than 700 to 1,000 open interest. That's going to create typically wider spreads, and it's going to create a situation where I'm going to be likely dealing with an illiquid option. It's kind of tough to get into and maybe tougher to get out of. So I don't want illiquidity being another problem. So take a look at the stocks within it. And then, that's what I'll look at in the overall uptrend there. Now, if you're ever curious about what the top weighted stocks are, this isn't a finite list of what's going on in financials. It's just a high concentration weighted list. And it doesn't mean these are the only stocks in XLF, but these are the heaviest weighted stocks in the XLF. So what else would be in XLF worth watching? Well, once you get past Visa, MasterCard, et cetera, you do have things like Citigroup. You do have things like American Express. And this list will shuffle up from time to time. So it's not that this is a fixed list in any way. Right now you have JP Morgan. I'm looking at the updated list. JP Morgan, Visa, MasterCard, Bank of America, Wells, SPGI, Goldman, Morgan, BlackRock. And then right now, American Express has overtaken Citi. Now, there are other uptrends in this, but they're just below the 11th weighted stock, which, by the way, American Express is 2% weighting, 2.03% weighting, as compared to Berkshire at over 12.5 and JP Morgan at over 9, almost 9.5%. So once you get down to those lower weighted stocks, there are a bunch down there, whether that be American Express in an uptrend, whether that be Schwab in an uptrend, whether that be Citi, what we mentioned before, in an uptrend, whether that be Marsh McLennan, not in an uptrend, right? So we have to be specific. At some point, we're just going to get down to the 11th place where we might see a little bit more movement, because between Goldman to Citi, you're talking about Goldman at about 2.4%, Citi at 1.8, 1.9%, and those could shuffle around and put 8, 9, 10, 11, 12 in a different order, but it's going to be the same stocks generally week in and week out in terms of high concentration weighting. JP Morgan's always going to be up there. Visa, MasterCard, Bank of America, Wells, those are always going to be up in the top part of the weighting. So these are things that once I understand what the structure is, and then I've automated the way in which I can identify the momentum and the trend, super easy. I don't have to get cutesy about anything. I can just take a look at a few factors on the chart and say, I like this, I like this, I like this. Is it above the 200? How long has it been trending higher? Is it green momentum and green trend? And all of a sudden, I've got a really good ranking for what the strength names are. And that's how XLF and SPY are really going to be moving together in terms of that strength. So that's the way I'm looking at this in terms of relative outperformance. These are little strikes, little insight into expiration. And as far as, follow up on Santa's picks, this is it. So I hope this has been helpful, gang. Thank you as always for being here, gang. I know it's a quirky day, but I'm going to sit and do a little bit more homework here before I catch some of the football games. Happy Christmas Eve and happy Christmas. I will see you all on Tuesday morning for Charts and Coffee. As always, gang, thanks for being a part of our Simpler Trading family, our group of traders here, and have a wonderful, wonderful rest of your weekend. Be good to each other.